Good morning, students. How are you all? Hope you all are fine at your houses. I am also fine, students. In the previous class, yesterday we have seen the transactions. That means we are in the third lesson, the book of prime entry. Okay, we are going to prepare the journal entries. That is called prime entry. Prime entry. Okay, journal entry. So to prepare the journal entries, we need to know some of the theory portion. That's what we are learning. That is the transaction, financial transaction. That both the two types of transactions available, cash and bank. The other one, credit transaction. Okay. So in the cash and bank transaction, the payment is done immediately during the transaction. But in the credit transaction, the payment will take place in a future date. Okay, now we will learn about the account. Okay, we have learned in for each and every transaction, it affects at least two accounts. Okay, so it affects two accounts. If one is debited, the other must be credited. We have studied. So now you should know what is the meaning of account. Okay, the meaning of account, or we can say the ledger account. Okay, we can say what is ledger account first. Ledger account means it is a summary of all the information, that means related to a particular person or particular item at one place. Okay, under one head. For example, one customer will be there. His name may be Sam. Okay, so Sam account will be there. Then all the things, whether if he has paid amount, there we will enter. And if he has purchased from us, or if we sell goods for him, that will be entered. And if he has given a check, that will be entered. Or if it is dishonor, again we will enter. Okay, so what is the ledger account? Ledger account, it is a summary of all that needed information, or everything is entered at one place under one head. Okay, that is called ledger account. Same thing, account also we can say that is a systematic presentation of all the information of a person, an item, okay, under one, at one place under one head. Okay, that is called account. Now we will learn the types of accounts, the classification of accounts. Okay, the classification of accounts. Before that, you should know there are two approaches in preparing the journal entries. Okay, two approaches in the classification of accounts also. Okay, now the types of these two approaches, the one is accounting equation approach, the other is the traditional approach. Okay, so the first one, the accounting equation approach, is the omitted portion, so we are not learning. We will learn the next approach, that is the traditional approach. Okay, in this traditional approach, how the accounts are classified, that we will learn. Okay, in this approach only we are going to prepare the journal entries also. Okay, here the main types, it is with all the accounts are divided into two heads. Okay, first one will be personal account and other one is impersonal account. Okay, first one personal account, the other one impersonal. So again this personal account is divided into three. Okay, natural person's account, natural person, then artificial person. We will not create a person, but that artificial person means the organizations. Okay, then representative personal account, representative personal account. Okay, so it is divided into three: natural person, artificial person, representative personal account. Okay, natural person account, we can say the ordinary human beings, those who have life. Okay, they are the natural person account. For example, I told you Sam's account. Okay, so then Hari's account. Okay, these are natural person's account. Here, for example, artificial person means you will learn in company accounts. That's not company accounts, company or type of organization. There we will learn company is an artificial person. Okay, so all the organization, for example, Ram and Co. Here it is a company's name. Okay, so that is an artificial person because sometimes we will sell goods in this name. So they are called artificial person. Then representative personal account. Here we will first learn about the example. Okay, here outstanding salary or outstanding rent or sometimes insurance premium, prepaid expenses and outstanding expenses. Then income accrued but not received, okay, or income received in advance. So all these are the representative personal account because here outstanding salary or prepaid rent or accrued income not yet received, all these related to persons. Okay, all related to person because salary we need to pay to the staff. Prepaid insurance premium. This also one expense we have paid to a particular person in advance. Okay. Here income we have not received from one person. So it is related to a person. That is why it is called representative personal account. Okay. Now we will learn the impersonal accounts. You have to read this one. It is given in the deleted portion. Okay. But we should know this one. The types of accounts. Okay. Impersonal account is, that means it not a person. It does not affect a person's account. Okay. That is called impersonal account. Here it is again divided into two. Okay. Real account and nominal account. Real account and nominal account. Here first real account. What is a real account? A real account, all the assets. Okay, all the assets. That means we can say all the properties and possessions. Properties and possessions, what we have. Okay, they are called the assets. Possession. Okay, properties and possessions, they are called the real accounts. Okay, here this real account again divided into two. Okay, one is tangible and other is intangible. You might have heard this meaning, that word. Okay, tangible and intangible. Tangible real account, that means here tangible assets. Okay, that means we can see and touch. What is the meaning of tangible? The assets that we can see and touch. For example, land and building. Then plant and machinery. Plant and machinery. All these we can see and touch, isn't it? Then furniture. Then fittings in the wall. Okay, then office equipments, computer, then computer, fax machine, photocopy machine. Okay, all these office equipments. Then motor vehicle, car, okay, bus. All these are tangible assets. Then intangible assets that we cannot see. Okay, we cannot see and touch. Those assets are called tangible assets, not intangible assets. Okay, so what are the intangible assets? Main thing, goodwill. You will learn this one. Okay, goodwill means from the name itself, goodwill, that good name of the organization. For example, we are studying in Bethlehem school. We used to say, isn't it? It had a name before. Now it is gaining, it is not getting its old name. Now it is losing its name. We hear, isn't it? Sometime we hear, but some say, okay, Bethlehem is good, isn't it? So the name that they have yearned for many years. Okay, Bethlehem school, everyone knows, isn't it? Oh, you are studying in Bethlehem school. That is a very big school, they say, isn't it? Okay, the coaching and all good, isn't it? So that is called goodwill. The name, good name of the organization. Okay, goodwill. Then patent. If a person discovers something, or if he has invented something, then he will have that patent right. For that product, he will get the patent right. Okay, that is an asset for him. Okay, that we cannot see, but that certificate he may have. Okay, but that right, if anyone is going to start an industry based on his invention, his discovery, then a great sum must be given to that person because he is having that right. Then copyright. This one is related to the book. If you write your book, you will have the copyright. You might have seen in every book, though the publishers or the authors will have one symbol like this. Okay, C. C will be kept in the round, I think, in the round. Okay. So that is called the copyright. Copyright is with whom? Who can take the copies of that book? It will be given to your publishers. Okay. That person, so that publishers, they will pay a large sum to the person one who has written that book. So that right will be with those publishers, the press people. Okay. So that is called copyright related to the book. This one related to the inventions and discoveries. Okay. So all these are the, then patent right. Okay. Trademark. Okay. Trademark. This also an intangible asset only. A company will have one sign. Okay. By seeing that sign, we will think, okay, this is this product. Okay, so that is having some value. Okay, that will not be given to anyone else. So all these are the intangible assets. Okay, real account is divided into two, tangible assets and intangible. Tangible real account, that what is tangible assets? It can be seen and touched. All these are the examples. Then intangible assets, intangible real account. So they are the intangible assets, all the properties that cannot be seen and touched. They are goodwill, patent right, copyright, trademark, etc. Okay, now we will learn the second type of impersonal account, that is called nominal account. Okay, here nominal account that includes all expenses and losses. All expenses and losses and all income and gains. Incomes and gains. Okay, they are called nominal account. Okay, so now we will learn the rule of this accounting. Now you might have understood the types of accounts on the basis of traditional approach. Okay, traditional approach, the main account, the accounts are divided into two. One is personal account, the other is impersonal account. Again, personal account is divided into three: natural personal account, artificial personal account, representative personal account. Okay, natural person's account means the person, natural person's account, the person, ordinary human beings account. Okay, here not human beings, but the organization. They are also considered as one of the person, but that person is artificial. So all the organization are called artificial person. Then the representative personal account that relates to the outstanding and prepaid expenses, then accrued and income received in advance. Okay, they are the representative personal account. Then the second type of main account is impersonal account. Again, this is divided into two, real account and nominal account. Again, real account is divided into two. Now, what is real account? All the assets of the organization. Okay, the assets, that we can say the properties and possessions of the owner. Then tangible and intangible, it is divided into two. Tangible means that we can see and touch. Intangible, we cannot see and touch. Okay. The nominal account, expenses and losses and income and gains. Okay. Now, I will teach you the rules of accounting. Okay. This is very important, very important. Okay. That is called golden rules of accounting. They will ask, what is the simply rules of accounting? This one only. What is golden rules of accounting? This one only. Okay, then rules of double entry system. Rules of double entry system. What are the rules of double entry system? All same rule only. Okay, we have learned that there are each transaction affects two accounts, isn't it? Now we have learned about three accounts, main accounts. Okay, personal account, then real account and nominal account. Now we can say, we can conclude personal account, they will, all these together we will give in one account. Then this impersonal two, no, that one two separate. So totally personal account 1, then real account 2, 3 nominal account. For these three accounts, one should be debited, the other one what should be debited and what should be credited, we are going to learn. Okay, so we will write how many accounts now? 3, isn't it? One is personal account. Second one, real account. Third one, nominal account. Now we should write. Okay. Then that's the rule. Okay. What should be debited and what should be credited? Here, debit the receiver. Here we can credit the giver. That you have to, next we should learn how to identify what are the, for each and every transaction, it affects two accounts, minimum two accounts. Okay. Then what is the rule for real account? Real account, debit what comes in. Debit what comes in. So what is the opposite? Credit what goes out. That's all. Credit what goes out. Then nominal account. Debit all expenses and losses. All expenses and losses. Here credit all incomes and gains. Personal account, debit the receiver, credit the giver. Real account, debit what comes in, credit what goes out. Nominal account, debit all expenses and losses, credit all incomes and gains. Okay, this is the rule. This one you have to learn. Okay, you have to learn this one very well. Okay, very much you have to learn. That pages I will send you in the, they will send you, but you have to read that pages. Okay, but this one you have to learn by heart. Okay, it's very important. Even when you are in deep sleep, if we wake up you and ask, you must be able to answer this one. So that much it is very important. Okay, if you know this one, then you can do the problems correctly. Okay, personal account, what is the rule? Debit the receiver. Person is, no? So one who receives the thing we should debit, one who gives the thing we should credit. Even thing means things or money, whatever it is. Real account, if we purchase something, no, that land we are purchasing. So, or we are purchasing some machineries, the machinery is coming inside, so we should debit. What is going out? Cash we are giving, so cash is also real account. Okay, goes out. Then debit all expenses and losses in the nominal account. Here for example, salary we are paying, but salary should be debited, and what is going out? Cash, credit. Okay, here we are receiving some income. For example, um, rent we receive. Okay, that the rent must be credited, and what is coming inside, this one should be debited. Cash debit, that rent received should be credited because that is an income. Okay, income and gain should be credited. Debit all expenses and losses. Okay students, I have taught you, so I will send the pages, you please learn by heart. Okay, thank you very much.